Hi, this is Hyperwave. I'm Leah, and I'm here with Tyler Jenks, and we have a guest appearance with Tone. Tone, say hi.
Hey guys.
So this is going to be a very fun one, given everybody's been writing in about inflation, deflation, fiat currency, also asking on both Tone's show, but also here on Hyperwave. So with especially both Tone and Tyler here, I think this is going to make for a very interesting discussion. Gold, fiat currency, and I'll leave the rest up to Tyler to explain what that acronym means. So without further ado, Tyler, I'll let you start off.
Okay, very good. Thank you. And welcome, Tone. This is going to be, I think, a lot of fun and very interesting to a lot of our followers who've been asking all sorts of questions about fiat currency, gold, and Bitcoin. And I think they're all very closely related. I think you and I, Tone, differ a bit about some of the relationships with what people think are conspiracy theories having to do with world banking and all that sort of thing. Maybe not, but this will be fun to get into. Drive carefully, please. If all of a sudden we see a look on Tone's face and he disappears, that will be my fault, and I apologize. So be very careful. What we're going to do today is I want to define what a fiat currency is. Everybody's throwing the term around, and it's not complicated at all. And it's important to understand why it is not complicated. Fiat currency is defined as a government-declared legal tender, but it is not backed by a commodity. Again, a fiat currency comes from a government declaring that that currency is a legal tender, meaning it can be used in the exchange of goods and services, but it is not backed by a commodity. Now, what's important about fiat currency is that its value is determined by supply and demand, not by the value of the material it is made of. And obviously, most fiat currency is made of paper, and paper is not worth anything as opposed to gold or silver or other currencies that might be backed by something, such as what is called a special drawing right. And we're going to get into a lot of detail on that. So that's what a fiat currency is. Now, how long has it been around? Well, fiat currencies were first used in 1000 AD by the Chinese during the Yuan and Ming dynasties. And 300 years later, Marco Polo, visiting China, wrote a book about the travels of Marco Polo, and in that is a quote. And here is what the quote says. Quote, "All these pieces of paper are issued with as much solemnity and authority as if they were pure gold or silver." That was in the 13th century. Now, fiat currencies did not spread to the Western world until about 250 years ago. And then one by one, various countries began adopting them. And now basically everybody has that. That is what a fiat currency is. It's based on the supply and the demand of the trust of the people that believe in the government that issued it, that government would make sure that there was value in that paper. And that brings us up to where we are today, where the world is flooded in fiat currencies. And we had 10 years ago a almost existential meltdown in the financial markets worldwide based on that fiat currency. which is what happened to Satoshi Nakamoto in his observations of this cannot happen again. And therefore, Bitcoin was born, the blockchain was born, and an alternative to fiat currency was established. And that brings us pretty much up to today, except one other concept, which is gold and silver. Now, gold and silver goes 2 millennia longer than fiat currency, which started in 1000 AD. Gold and silver was used 2,000 to 3,000 years before that as a means of exchange. Clearly, it was not fiat currency. It was itself a currency and still is today in many people's minds, even though in 1971, Richard Nixon closed the gold window, just taking the United States out of the Bretton Woods 1944 agreement, in which all nations of the world used 2 reserve currencies, gold and the US dollar. It was unilateral on the part of one president. We've gone into a little history. We won't bore you with that right now. But it wasn't until 1973, 2 years after Nixon closed the gold window for the United States, that Bretton Woods fell apart. And after 1973, there was no more gold backing against any currency in the world. It was replaced by a number of things, but one of them is an SDR. And I'm going to spend a little bit of time explaining that. But first, I want to turn it over to Tone and see if his reading of this very short, brief history of fiat currency and the beginning of Bitcoin is similar to his thinking.
Yeah, I mean, I agree with pretty much everything you said, though I will say that if I had to guess, I would say that the beginning of Bitcoin coinciding with the financial crisis was probably more of a coincidence than some kind of a master plan. I mean, I really think that for something like Bitcoin, that is something that Satoshi, whoever he is, has been planning on it for a long time. And maybe, he slightly adjusted his launch date. But I mean, launching it on the first week of the year was probably the plan. Whether that was initially the year before or the year after, and maybe it got pushed up by a year. Like, I think that it being launched after the financial crisis was just a coincidence. Bitcoin is just something that technologically its time had come.
Great point. And I'm sure I overstated the causality of that. It probably was a coincidence. And when we talk about Moore's law and what happened with the exponential growth of technology and speed and memory and power and the cost going down, that led, in my mind, to the dot-com bubble after the internet was established and allowed for that type of tremendous growth. And then the crash of that in 2000, that was probably a more important precursor because it established this tremendous ability to do what Satoshi then recommended. I would like to believe that he had a vision that what the world had just gone through, he possibly had a solution for. But since we don't really know who he is and don't have anything other than the white paper and some people that worked with him early on, that is a jump. So I think your point's well taken. Let me talk for a second about this almost unknown currency. And this is where the conspiracy theorists really have a field day when talking about the World Bank and the International Monetary Fund. Back in the 1960s, Bretton Woods, which was established in 1944, and the IMF and the World Bank that came out of the United Nations and the formation in 1947-48. The world seemed to be trying to coalesce around an idea that, look, folks, we've all got to work together. And in working together, we're going to try to do better than the League of Nations, which had come about back in the early 1900s and fell apart. And World War I and World War II ripped countries and continents apart. So everybody came together during World War II and then up through the end of the 1940s, trying to establish world government in some form and a world currency in some form. So they fell back on the strongest currency at the time, which was the US dollar, and on gold, which had been the backing of most currencies for 200 years prior. And they came up with this thing called the reserve currencies of the US dollar and gold and their interchangeability. But Charles de Gaulle in the 1960s began to attack the United States by sending back paper fiat US dollars by the billions in plane loads, and they would fly into Kennedy airport, and armored cars would pick up all of those euro dollars that were at the time US dollars that had been left in Europe after the exchange of goods and services, starting with the Marshall Plan. And we began running a deficit in 1961 under Kennedy that we have run every year since, except for 2.5 years under the Clinton administration, where we had a small surplus. But every year since 61, and particularly during the years of the Vietnam War, some nations like France began to question why the US was running these deficits and that they were devaluing their dollar. So what Charles de Gaulle began doing is shipping those paper dollars back to the United States in 1965, 1966, 1967, 1968.
Hey, Tyler?
Yes.
Yeah, can you just make it clear that he was French, correct? It was coming out of France.
Absolutely.
Right. And I was also going to mention the two, non-deficit years under Clinton that the Democrats were like constantly using in elections. That was all, the dot-com bubble driven.
No question about it. A great observation. And not only that, but for the first time, Congress under Newt Gingrich worked with Clinton to not only balance the budget, but to get those surpluses. But you're right, the technology boom fueled a lot of that ability during the 1990s. Okay, so France, who has always been kind of a thorn in the international side, but particularly United States, particularly under Charles de Gaulle, just kept shipping back US dollars and in return would take back bars of gold because they were interchangeable, which was done at a constant dollar rate, which at the time was $35, then moved up to $37.50. Back before 1933, it had been down at $32.50. But the point is that gold was constant in US dollars, but the US dollar was dropping in value because of the deficits. So, like any good arbitrager would do, Charles de Gaulle said, okay, I find a loophole here. I'm going to send you back billions of dollars and I want billions of your gold. And he did that repeatedly under tremendous scrutiny and problems in the United Nations. The US tried to stop him, but that's the way Bretton Woods was set up. And finally, Richard Nixon, right after his election, could not take it anymore. And he said, this far and no further, we're closing the gold window. We will not accept paper dollars for gold any longer. Okay, that sets the stage for everything that has followed.
Right. So Tyler, to just as a quick reference note, just want to point out that this is not a conspiracy to end the gold backing of the dollar. The U.S. had absolutely no choice. It was going to implode the country because we were going to run out of gold, and then all confidence in the dollar would have been lost. This is what Nixon did to prevent hyperinflation.
Absolutely. And I applauded it at the time, and so did the world, because what began happening is the IMF, who parenthetically is the one that controls SDRs that I will talk about in just a minute, and the US Treasury held auctions of gold every 6 weeks in order to keep the price of gold down. And after every single auction by the IMF and the US Treasury, which, by the way, was tons of gold in each of the auctions in increasing amounts, every time one of those auctions took place, the price of gold bidded higher and higher all the way until 1980, when it peaked at $880, right before Paul Volcker slammed the door on inflation by raising interest rates to 15%. So there was a concerted effort on the part of the US and the IMF, controlled by the US, to keep the price of gold down. Because it was freely traded around the world, it did just the opposite until Paul Volcker stopped inflation and started a 40-year decline in interest rates, during which time the price of gold fell all the way back to $265 before this most recent run up to 1900. Okay, so that's the backdrop. Now, I wanted to talk about SDRs. An SDR stands for Special Drawing Right, and they were created in 1969. 1969 is after the French began dumping dollars for gold and before Richard Nixon closed the gold window in 1971. And this is the important part. So far, there's been $300 billion created in SDRs. And SDRs originally, back in 1969, were set up as a basket of 5 currencies: the US dollar, the renminbi, the yen, the British pound, and the euro. Now, the euro wasn't the euro back then, but it was a basket of European currencies. It wasn't until years later that it was established as its own currency. But all the way back in 1969, it, taken as a group of European currencies, was included in the SDR. Now, initially, the SDRs were backed in 1969 by 0.888671 grams of gold. At the time, 0.888671 grams of gold equaled $1. So, in 1969, the IMF, the International Monetary Fund, controlled and led by the United States, set up this thing called special drawing rights backed by gold. The weighting of the currencies in the SDR back then and also today is US dollars 41%, euros 31%, renminbi, Chinese renminbi 11%, the yen 8%, and the British pound 8%. So that's what makes up the backing of a special drawing rights. But after Bretton Woods collapsed, remember, not in 1971, when the United States closed the gold window for the United States, but in 73, when Bretton Woods dissolved and there was no backing of the dollar and gold as a relationship anywhere in the world. So starting in 1973, what the IMF did is they dropped all gold as the backing of SDRs. And they were only backed by the 5 fiat currencies. And that is true as of today. Now, every 5 years, the IMF can change the weightings of those 5 currencies, and possibly they could add other currencies, which is very probably what will happen because the Chinese are attempting to establish their own basket of currencies to replace the US dollar, including commodities such as oil and gold. And they are making headway because a number of our biggest allies have signed on with the Chinese to do just that. Okay, so now we've added another piece to this whole question of fiat versus gold versus US dollars, which is called SDRs, which is alive and well, and in many senses is actually sitting in a very strong position. Some of you may have heard that the IMF was considering coming out with a blockchain and a currency based on SDRs. A couple of things, and this is where it gets very cloudy, and there's no question about it. But I would like to just give you one more anecdote about SDRs. And it was something that appeared, and Tone remembers this particular cover, in The Economist magazine, which is one of my favorite financial publications. They ran it back in 1988 under the cover issue was entitled, "Get Ready for a World Currency." This is 1988. And we could go back and talk about what was happening in 1988 because a lot of things were happening. The stock market crash of 1987 and a lot of things happening with currencies around the world. A lot of that had to do with the technology advances in financial instruments. At the time, they were called insurance that blew up because the computer systems couldn't handle the volume of trade going through. But in any case, in 1988, The Economist writes this article, and they had a name for the currency, and the name of the currency was the Phoenix, and it was based on special drawing rights. And at the time in that article, it was predicted that in the year 2018, the world would accept the Phoenix or special drawing rights as the world currency. No longer anything to do with gold, no longer anything to do with the US dollar, no longer anything to do with a basket of 5 currencies. There would be a new currency called the SDR, and that would be called the Phoenix. Now, in Zero Hedge earlier this year, there was a very interesting quote on in Zero Hedge, quoting Steemit, that said, quote, "The proclamations of a world currency launch by 2018 are happening today, right on schedule, right in front of us. When the next reserve currency system is established using the SDR basket as a foundation, I have no doubt it will be digital and based on the same exact technology that today's activists wrongly assume will set them free." So that's the conspiracy theory, something that occurred 30 years ago in The Economist. And the note in Steemit was, and everybody knows who owns and runs The Economist, the Rothschild banking family. And all the things that we've heard over the years of this world global attempt to break down borders and break down barriers and break down currencies and have one centralized world government currency is what's feeding the worries that people have today about what is about to happen because of the 07, 09 meltdown in the world's financial systems. So that's the whole story. No conclusions from me other than to point out the timeline, the elements of it, and I'd love to get Tone's view on this whole topic.
Thanks, Tyler. Yeah, I have a couple of comments, but Leah, you look really, really nice. Something.
Well, are you going to a gala in that as well? Okay, you're frozen. Thank you, gentlemen.
Awesome. Thank you. Look great. Okay, so just a couple of notes. I don't actually remember the article and the cover of The Economist from 1988. I was a little young, but I remember seeing it more recently where I ran across that article due to the same, conspiracy theories.
Right.
Also, Tyler, do you find it a tad bit interesting that we're hearing all of this, what I like to refer as nonsense, of the Chinese backing their currency by physical commodities like gold or oil, where the Chinese were on a fiat system 1,000 years before anybody else?
Absolutely. That's funny you bring that up, because they're the ones that introduced it. And in Kissinger's book entitled China, which I think is one of the most fascinating books I've ever read, his whole point about China relative to the rest of the world is never in their history did they attempt to go outside of the Chinese borders and interact with anyone else. They always did everything internally, and it was perfectly fine for them as a civilization because they believed that they were the shining sun of the earth, and everyone else, all other civilizations, were inferior to them. Now, what happened, according to Kissinger, is because they were so insular that time did not matter to them. They did not care if something took a century or 5 centuries or 1,000 years. They were patient. And now what we're seeing is all of a sudden, for the first time in history, China interacting very aggressively with everyone around the world. That's the first time in Chinese history that's happened. And because of that, you're pointing out the amazing irony of not only first establishing fiat currency, but now because they are attempting to corner commodity markets worldwide in South America, Southeast Asia, all throughout Africa. They are basing a lot of what they do on commodities and commodity pricing. So, great point.
So, here are my general thoughts. I do not believe for a second that the Chinese are going to back their currency with a commodity. I don't understand, and Zero Hedge is probably 80% responsible for this nonsense these days. So look, countries that are backing their currencies with commodities are countries like Venezuela, countries that are using every last gimmick possible to bring confidence back into their economy. When your economy has confidence in it, the last thing you need is to throw handcuffs on your ability to maintain and control the currency of your country. So I see quite the opposite. If the Chinese are hoarding gold and oil, that could be true, but that should not project into the fact that they're going to back their currency with it. What that means to me is the Chinese are trying to convince the world that they are the most responsible, nation in the world. Because what makes you a fiat, what makes you a reserve currency, which is as much of a plague as it is a gift, what makes you a reserve currency is confidence of the world that your currency is the most stable, and your political system and your government is the most stable, and your military is the strongest in the world to minimize the threat of invasion. That's what makes you a world superpower. And the US has been this for almost about 100 years now, and for now remains so. So I just watched one of your videos the other day where you showed a decline in the US dollar. And this was a little bit interesting because even though the US dollar has gotten weaker over some time, most other currencies have gotten even weaker against the dollar. Like you said, even the euro is weaker now than during its launch, and the British pound is weaker now. So even though the dollar has lost strength based on the index against the US dollar. But anyway, I'm getting a little bit off tangent here. So for me, this idea that the Chinese are going to back their currency with commodity is outright nonsense. Not going to happen. They're just trying to prove to the world they are going to be most stable with potentially the least amount of debt, with the strongest military, and the greatest amount of gold. In case anything happens, they are gold rich. As for the SDR, I don't really know a lot of detail of the history of the SDR, but again, to me, the SDR probably will be an all-out digital currency. I don't expect to be any SDR physical bills, though I will say that probably prior to the 90s, there probably was an intention to have SDR physical bills. It's just there's no need for them anymore. And also, having bills is really bad for government because without bills, there's no bank runs and they can, you know, issue their own monetary policy. There's no way to really exit the system. So to me, the SDR serves like gold in that it creates this reserve against your local government, because even for the United Nations and the World Bank and whatever, they are not really interested in this, you know, as Jim Rickards, who also has gone way off the rails, likes to call it, what do you call it? What does he call it? Some kind of war? What does he refer to it as?
Yeah,
you guys remember? Currency wars, right?
Yes.
Right. The debasement of the currencies, right? So these global, I guess, conglomerates, these global initiatives, you know, they're not interested in the British pound fighting with the US, fighting with the euro for devaluation. And they, just like gold, they want something as a backup to kind of keep a check across these countries. So I don't actually have a problem with the SDR because I know you're not going to walk into your local, you know, Walmart, no matter what country you live in, and pay with the SDR. That's not what it's meant to be. It's not going to be this one global currency to rule them all because it's impossible to maintain. So to me, it's more like it was basically a replacement to prevent another, you know, French minister from getting all the gold. He would have to then submit a claim to get digital SDRs instead if he doesn't want to hold on to another nation's currency. And then he can hold like its own digital representation of a basket. But hey, if you don't like your own French currency, you can hold a basket that's globally recognized by other governments. If you don't want to, if you're getting too many dollars because of whatever it is you're doing with your import-export, and you don't want to hold all those dollars, hey, sure, you can diversify them through the SDR. Like, I don't see it as a conspiracy at all. That's kind of my general view on it.
Can I chime in on China?
Please.
Sure.
Right. So, I mean, China was successful with debt-fueled growth, but then the IMF and the World Bank started clamping down, right? This was really huge in 2012, 2013. China has like taken over the World Bank with a much better competitor. You know, people have been upset with the World Bank for a long time, but on the top side, they've also started funding the World Bank a lot and actually have gotten a lot of power there, right? So the voting rights, as you know, right, it comes from, you know, it's the United States, it's Japan, it's China, it's whoever funds the most. United States always has the board seat there. The IMF always has a European, which is Lagarde, right? Okay, but what was interesting specifically in 2012 and 2013, again, was the credit issues, and specifically how those opening those credit lines to fuel investment and spending then started getting really screwed. And everybody was just talking about how, you know, all these debt issues, it was gonna not only just like, it was the housing market's gonna totally crash, and they should have crashed if things didn't remain pegged. And then even have, you know, the Chinese government clandestinely come in and take care of all these issues because they can keep printing with everything pegged, right? So it was a short-term solution that I saw with this gap growth that they were trying to keep up, you know, with the rest of the world, always keeping an eye on it. If I would see one thing, and again, that was just like, you know, they're not even tackling any of their deeper issues, any of their structural issues. This was just surface level stuff that they were trying to, you know, cover up, I'd say, because again, people can't get real stats about China right now as well. But with trying to build all these cities, especially what they were trying to build up in Shenzhen, if you're trying to move Foxconn in, all these ghost cities, which then they were creating for millions and millions of people. I mean, it was extraordinarily artificial. But just one last thing to say on that, right? If you looked at the Asian equities, if you looked at Singapore, if you looked at Thailand, Indo, everybody that was investing across all the exchanges in Asia were really, really worried that China was going to be a catalyst. As a very small example on this will come circle to you guys, is Fanuc, right? Which is the largest robotic arms company in the world, and they're Japanese. Now, the micro drill that they provide is used for iPhones in Foxconn. So if China's having more issues and Apple decides not to use the micro drill for the upcoming iPhones and they move it back and they don't use China, you know, obviously China's, you know, shit scared. Okay, so what would I see this as? Because correct, you were talking about xenophobia, Tyler, and they've notoriously been known for xenophobia until they got smashed by the British with opium, right? But also something interesting to note is the poor tea bubble, right? Which also screwed them. But I would see this as them.
What is that?
The poor tea bubble is my favorite.
What is that?
Very quickly, just like the tulip bubble in the Netherlands, the Dutch tulip bubble, they actually, it was poor tea. If you've ever had it, it tastes like dirt. Actually, it tastes exactly like dirt. Unless you kind of get an acquired taste for it, it's pretty disgusting. But they were collecting it, and it was getting a higher and higher price for this tea, just the same way as tulip in the Netherlands were being traded. And then all of a sudden, it became less and less worth less and less and less and less until the market completely crashed. At one point, people were storing it as if it was Rothschild wine.
I've got to look into that. That sounds like a hyperwave to me.
Yeah, for sure, for sure. So in regards to what you guys are talking about, I mean, you know, China has not played fair game with the WTO or, you know, with the rest of the world for a very long time. Yet now they're finally succeeding around the world, to your point, in Africa and then taking on the World Bank. And you guys have been talking about Bretton Woods and going off the gold standard and the purpose of establishing, you know, what do we call it? The Washington Consensus is with the IMF, the World Bank, and the Treasury here. Now, I would see this as them trying to make a strategic diplomatic move, a PR move, that they're potentially trying to play a game by what, if they potentially unpeg or whatever it may be. Now that they're starting to be successful, and now that a lot of people are looking at China as the leader, and also since they still own all our debt, as a real rule maker, decision maker. Now you guys can smash.
Oh, hey, Leah, I've been under the impression that the Chinese have been selling U.S. debt since 2012. I think they're almost like there's almost no U.S. debt in China. They're out.
Yeah, I think the number I saw was it peaked at about 4 trillion, and it's now down to about 1.7 trillion. So absolutely, they've been slowly getting rid of it, which is the smart thing to do.
Yeah, it is. Japan's been buying up a lot of debt, and for some reason, tiny European countries like Liechtenstein and like God knows what else over there. It was weird. I mean, this conspiracy I was kind of believing in is that like when China stopped buying U.S. debt and started selling U.S. debt, the U.S. had to scramble and find new buyers, and they kind of, you know, the U.S. still has a grip on Japan, and the U.S. kind of convinced the EU to kind of get their countries to buy U.S. debt, and I think it kind of started being funneled into these small European countries that were kind of going unnoticed. So someone might want to pull up some of those stats. They are around, but they weren't very popular. But yeah, China's getting out. Oh, and China converted all of the U.S. long-term debt into U.S. short-term debt in order for it to just expire on its own over the next 10 years.
Yeah, good points. Leah?
So, yeah? Were you going to say something first, Tyler?
No, I wanted to hear what you were saying.
You guys are absolutely correct when it comes to United States debt, but I didn't make it America specific. So especially in the way and foreign. So you were mentioning that especially infrastructure projects that are being funded, that China's been very successful in sub-Saharan Africa, that debt isn't being paid off in the same way that with the World Bank, they inflate away their debt with like a 30-year maturity. So there is still a lot of debt money owed to China across the world from different projects in different areas, as well as just within their own nation. They're having a lot of issues, but I could be very wrong. But yes, I wasn't specifically referring to the United States treasuries that they bought.
Well, I'd like to just summarize what we've said, because I found it fascinating, and thanks to Tone for taking the time to challenge a number of these assumptions. But the way I picture it is, for the first time in world history, we've got 3 or 4 Goliaths locked in a room together. That room is planet Earth. And because of technology and because of communications, we've broken down the borders between those countries, and everybody is now locked together face to face. And everyone has their own agendas, but there are 3 or 4 monsters compared to everyone else. The Euro zone was one of them until Great Britain stepped aside, and the Euro is now trading lower than it did when it first came out. If something happens in Spain or Italy or in Portugal or in Greece or in Ireland again, who knows how strong of a union that is going to be. But it is still one of the top 5. But then you've got Japan, that has been basically in a 35, 40-year recession after recession, a depression in real estate, and 0 interest rates, trying to get something going. And there is some indication there's something happening there, but it's still a powerhouse. You've got the new kid on the block that overtook Japan, will overtake the United States in terms of total GDP sometime the next 4 years. It'll be 50 years before they overtake us militarily and a lot of other ways. But don't count that out. But from an economic point of view, a tremendous powerhouse that has their own agenda. And now I think more and more you have got world leaders thinking and talking about what went wrong in 07, 08. I would just like, once again, I've done this before, but to remind everybody, if you're interested in these topics, to read the book that's entitled "This Time It's Different" by Rogoff and Carmen, about the last 600 years and 64 countries in which their finances blew up and came very close to what we did in 07 and 08. The book was a comparison of what happened leading up to 07, 08, and then a comparison of that with these 600 examples and 60-some countries and 5 continents over the last 600 years, and the similarities between all of them. Governments tend to do the same things, particularly with fiat money, when they're put under pressure. So my conclusion of all of this is there are a lot of very important forces at work. Cryptocurrencies and Bitcoin are not yet one of them, but they have attempted to make their mark, and we'll see what they're able to do if the ecosystem is able to get its game together and get rid of a lot of the cryptocurrencies and start concentrating on the initial idea of what makes Bitcoin different than either SDRs or gold or individual fiat currencies. And it's not just price. In fact, price has little or nothing to do with it. And I think there's one thing that Tone and I can definitely agree on from a trader or investor point of view is all of this will come out in the price. You've got to watch the price of US stocks. You've got to watch the price of gold. You've got to watch the price of Bitcoin and other currencies. The Chinese stock market is sold off very dramatically, much more than the US's little 10 to 15% setback here. And all of this is because of these forces. But by knowing that the forces are out there, but then going back to the prices will never lie. The market knows all of these things that we are talking about today. And we'll let Tone have the last word here.
Yeah, no, my view, I agree with you. It's all going to come out in the price. Now, I mean, I do see some worries for the US dollar, and it's not really debt or deficit related. I mean, it sucks that there is a deficit. The government should be able to live within its means. And even under lower tax revenue, I think the government sector has blown too big. And I think if there's anything to concentrate on, it needs to be the unfunded liabilities and not the national debt. But that's a discussion for another day that I'm sure we will have. Also, I'm sure, Tyler, we will want to do one of these shows in the near future where we talk about the concept of inflation versus deflation in a currency and how that relates to Bitcoin and other fiats right now. So we'll probably leave everybody with those future topics. As for the concept of the SDR, and again, I'm not scared of it. I don't think it's going to amount to much. And I think Bitcoin is going to challenge the SDR. I don't think Bitcoin is going to challenge any individual currency. I think Bitcoin is actually going to do what the government wanted from the SDR. A controlled, well, Bitcoin would be uncontrolled, right? So the difference between the SDR and Bitcoin would be a way to exit from your current government's fiat system if you're not happy with the way your current government is printing the money or borrowing the money, or in the case of unfunded liabilities, the way they're promising, future returns. And in a way, the SDR would be this global confidence to prevent major economic collapses. And I think Bitcoin can serve as that function, in that a country, whether it's, US or China or something smaller, a country like Australia or whoever, they would need to be very careful as to how loose their governments are going to be with printing the money, because the population has a way to exit through Bitcoin, which is a lot more useful than exiting through gold. So that's kind of how I see Bitcoin's role when it comes to government currencies.
Terrific. Great. And we'll take you up on that inflation, because it is so important in a lot of ways. And we don't see it right now, except in the price of things, but that can be offset. So that'll be a fascinating discussion. And Leah, thank you again, Tone. Leah, you've got to go to a gala and wow them, which I know you will. Do you have any last comments?
Yeah, I guess I'll save it. I mean, I'm going to enjoy debating you guys as well, or joining in on the inflation deflation conversation. I guess the last one is for the little Dutch skeptics in this live chat. Alles goed? Gaat het met jou? Dankjewel. So I That one, ik leer Nederlands. So maybe I'll give you a lesson in the tulip bubbles. But everybody, thank you so much and have a great day. Tone, thanks for joining us. You look a little cold, but hopefully you'll get a fire or something pretty soon.
Yeah, I finally warmed up. That was not fun. Spending like 3 hours trying to set up a miner, literally virtually outdoors in the snow. And the end result is I'm in a worse situation now than I was when I drove up there as far as shit functioning.
Are you going to give up on this? You know, the definition of insanity is ...
Right.
Thank you very much, Tone. Thank you, Leah.
Thanks, Tone. Thanks, Tyler. Bye, everybody.
Bye-bye.
Bye.